but I would like to call our workshop to order. It's 2 minutes after 9, so Mr. City Manager, I'll turn it over to you.
Okay, first on our agenda this morning, Mr. Wade Sansbury from Mdna and Jenkins is here to briefly go over our audit with you and answer any questions you may have. And we appreciate Wade making the trip today.
Good morning.
Good morning.
Our annual treat, from you. Yes, sir.
All right.
Here today to present to you the audit financial statements for June 30, 2010. One thing I'd like to note before we can get started is that on pages 1 and 2, this is our opinion for the financial statements this year. Again, it's an unqualified or clean opinion. One thing to note a little differently this year, the very last paragraph on page 2, it's got reference to a single audit this year. The city received and expended almost $2 million worth of federal funds this year, which were required to have a separate, different layer of an audit this year. As such, we actually had to perform 4 individual single audits on those particular grants this year. So there's reference here to an additional report that's in the back. Additionally, the report is dated November 29, 2010. That's a very good reflection on the city's finance department. They're doing a very good job in getting things together correctly and timely. That's a significant improvement from prior years. I'm going to point that out. Beginning on page 3 is the Mdna. I always point out that that's a good bit of information if you don't read anything else in the financial statements. A lot of good comparative information from 2010 and 2009. Page 12 is the statement of net assets. As of the end of the year, the city has $179 million in total assets, $88 million in total liabilities, and $91.1 million in total net assets. Page 13, this is the statement of activities. In other words, the entity-wide level of the city as a whole income statement. For 2010, I can say that not too many other cities and counties across the state have as good looking of an income statement as you all did this year. You actually have an increase in total net assets of $10.3 million. $5 million which came from governmental activities and $5.3 million which came from business type activities. I think that was, again, a very good use of funds this year, a very good strong effort in maintaining costs, keeping costs down. In addition, this year was the first full year of SPLOST revenues which the city received, which also helped in this regard, as well as the grant revenues that we talked about earlier. Additionally, the business type activities had a very strong year. The electric revenue, the fund was obviously the biggest component of that, and a lot of that is due to the release of municipal competitive trust fund monies to the city during the year, which lowers your overall energy costs for the year. Page 14 is the governmental funds balance sheet. The major fund there is obviously the general fund. At the end of the year, you had $4.1 million in total assets, $1.8 million in total liabilities, coming down to a positive total fund balance of $2.2 million. On page 15, again, for the general fund, you had a little over $18 million in total revenues, total expenditures of $23 million, other financing sources of about $6.3 million, coming to a positive $1.3 million change in fund balances for the year.
Is that unusual to have that many transfers in?
The total dollar amount or the net amount?
The dollar amount, the $10 million.
Well, what you've got there is $15.7 million of transfers in and a little over $10 million of transfers out. That net of $5 million is a reasonable figure coming from essentially your enterprise activities coming over. This is something that we've talked about, I think, before, certainly with City Finance Department personnel. The way that the system is currently set up and the way that the funds are initially generated by the Electric Revenue Fund, to move those funds around, it creates these large transfers. And I think something that I've talked with Chuck and Marcus about quite a bit this past year, To remove those, what you would need to do is to be able to, on a daily basis, when cash actually comes into the city, to be able to break out the $500 receipt between what goes to the general fund, what goes to the water fund, what goes to the electric fund, et cetera, et cetera. And right now, the system is not being able to generate that information for you all on a $500 receipt. And therefore, all of the money originally comes in and is deposited, for the most part, into the electric revenue fund. Then to move it out to the other funds, it's going through the transfers. So that's why they appear to be large, but yet what you really should be focusing on is the net figure here in the statements. And I think going forward, if you could ever get the system to generate that activity and to have, again, when someone comes in and pays a $500 bill, and $200 of it needs to go to the water fund, $200 needs to go to the electric fund. If all of that can be separated at that point in time, at the point of receipt, if you will, these will actually come down, and you will only then see the net amount that the city actually intends to transfer from one fund to another.
Right. Well, when it's put into the computer, I'm sure it's segregated out, isn't it, Marcus?
It always goes to the electric fund and then...
And then, but when you go to the bookkeeping process, it's got to go to the different funds that your total bill represents.
When the bill is done,
Yes.
each fund gets its appropriate share of the revenues.
Right.
It's purely when a bill is actually paid to then break out that cash.
Sure, I understand that. I just wanted your opinion. Thank you.
Yes, ma'am. All right. Going on forward to page 19. It's your balance sheet for the enterprise funds. Your water fund, electric fund, solid waste are your major funds there. Again, total assets for the enterprise funds of $149 million, made up mostly of capital assets. Total liabilities
Which
of
page you on?
That's 20, I guess.
19 and 20.
Okay, thank you.
Total liabilities of a little under $82 million, coming down to total net assets of $68 million. Okay, on pages 21 and 22, the income statement for the proprietary funds. As you can see here, the electric fund had the strongest change in net assets, a little over $5.7 million. But in total, all of the enterprise funds had a positive $5.7 million increase in net assets from the year.
So the solid waste fund, looking at that column, the shortfall for the year would be how much on that one?
That fund actually has a operating loss of $359,000, but it had other non-operating revenues of $157,000, small amount of capital contributions and net transfers in of $573,000, which actually caused it to have an increase in net assets for the year of $373,000. Almost got rid of the fund deficit that was there from the prior year. All right. Probably the most important statement in the whole financial statements, pages 23 and 24. This is your statement of cash flows. Your proprietary funds generated positive operating activity cash flows of $20.7 million. That's very, very strong. All right. Going forward, beginning on pages 28 are the footnotes to the financial statements. A lot of good detailed information there. Won't go over all of those with you unless you all have a question on a particular note. Page 63, this is the schedule of funding progress for the retirement plan. There at the bottom, the actuarial valuation date of January 1st, 2010 indicates that the funded ratio of the plan increased from 73.6% to 83.2%, which is again a good positive change for the 2010 year.
Now that's the OPEB on the medical, or is that on the...
This is purely on the retirement plan.
Which is GMA's.
Okay.
And I had a friend go through that annual report for me, and basically said it's well-funded, so
Absolutely.
one of the better ones you'd looked at when you look at Hammetrack and all these other cities that are broke.
That's right. That's right. Of course, with the overall markets the way that they have been, a lot of them over the last few years have gone down because of the actual value of the assets has decreased. Yours actually increased from $36.8 million as of the same valuation date in 2009 to $44.2 million as of 2010. All right, going forward, you've got all your combining schedules for all of your non-major governmental funds, as well as your non-major enterprise funds. We'll skip over all of those. Beginning on page 86, you've got your statistical information. A lot of good historical information going back about 7 to 10 years. And then after the statistical section, you've got your compliance section. Page 110 is the Yellow Book opinion. This is your internal control over compliance and other matters. There were 3 deficiencies noted this year, and I'll get to those in just a second. Page 112 is the A133, or the single audit opinion report again that I mentioned earlier. With the 1.9 million in total federal expenditures, again, we did 4 single audit separate tests on those grants, and as a result of the single audit, there were no deficiencies noted when it came to the expending of the federal funds. Page 117 and 118 are this year's findings, if you will. We had item number 1 relates to sales tax payable and customer deposits. This was simply an audit journal entry that needed to be recorded to actually increase both liabilities to their actual balances as of the end of the year. Item number 2 and number 3 kind of relate to each other. Both of those are related to the grant activity during the year. Again, the city has not seen the grant activity that it had in 2010 in many, many years before. And as a result, there were a lot of things that needed to be done that you all had not ever had to do before. As such, it was recording a lot of grant receivables at the end of the year, deferred revenues at the end of the year, as well as the revenues as of the end of the year. So item number 2 relates specifically to the audit adjustments to increase your overall grant receivables, deferred revenue, what have you. Item number 3 is simply you had a couple of relatively new funds that an original budget was not adopted for. State law requires all special revenue funds to have an annual adopted budget. Even if you adopt a dollar expenditure, dollar revenue to offset it, you have to have some form of annual budget. The 2 funds here, the CHIP 2008 fund and the Neighborhood Stabilization Fund, did not have original budgets adopted for them, so we have to report those as a compliance finding.
Let me make sure I understand these 3. There's sort of periodicity issues, if I understand. 1 and 2 relate to adjusted balances as of June 30th, periodicity thing. Now, with our new computer system, accounting system, what in effect, last May it started. Now that it's up and running, will these periodicity issues go away?
Specifically, sir, is item 1, the sales tax payable, customer deposits. We've been working with Cogsdale for a good 9 months, almost a year, to correct that one issue, and it specifically relates to a customer places a deposit, they satisfy the requirement, and then that deposit either gets refunded or gets applied towards the bill so that it eliminates that deposit liability. We've been working with Cogsdale for them to write a program, a script, if you will, that will automate that process. As of the date of the report, that was then corrected, so that program is now in place.
So the short answer is, yes, that issue's gonna go away.
It's done.
Okay,
It's a
now-
journal entry.
The system creates that journal entry
They'll
automatically.
take it out of the liability for the deposit and, correct.
It'll
All right, number
automate it.
2 is a grant issue,
Yeah.
and that's a sort of a separate little periodicity thing, but do we now have that issue corrected, or?
Yes, sir, to the best of our ability on that one, because there are several different agencies from which we get information from, and depending on the timing of when we receive that information and when the audit begins and when we send the data over to the auditors, there may be, as you're saying, the periodicity issue where we've requested the data, but we don't have enough information to book the receivable to make a reasonable estimate of what that
So
number
we're
should be.
sort of to mercy of all these government agencies when they give us their reports, is that?
Right. Go
our
ahead,
goal-
I'm sorry.
Go ahead.
Well, this just has to do with sales tax. I'll wait a minute.
Let me go to the third one then.
Okay.
We went through this budget issue with the confiscated assets fund and the failure to have a budget. These 2 funds that's mentioned, I think it's 2 if I remember right,
The CHIPS and the neighborhood savings.
they popped up in the middle of the year after we did our budgeting, so what we should have done is immediately created a budget for them, so we had one, even though they came late.
That is correct.
So after the confiscated asset fund thing, in this,
Right.
I guess we got that figured out. Anytime we have a fund, we need to create a budget immediately.
That is
right?
correct. As a matter of fact, in February, you're going to have 3 new funds come to the table. 2 TAD funds and a tax incentive program fund. So,
But you have it set up. You just didn't make note of it. I mean, you had to. When you got $500,000 CDBG grant, you had to have it allocated in certain areas, did you not? Or were
That
there
is-
no strings attached to it?
that is correct. There is a budget plan that is submitted to the state, but depending on when that program actually begins, that
Right,
affects
yeah.
then the timing of the revenue and the timing of the expenses. So
But-
there's,
But we have to approve a budget resolution, creating that budget officially in our system.
yes,
The state knows we have a budget, we're taking care of it, but we don't have it on our books officially.
correct. And sometimes, even if we just estimate $1,000 in revenue and $1,000 in expense, just so that we recognize that there is a budget in place, right or wrong, because at that time, we may not have enough information to come up with a reasonable estimate or a more accurate one. We'll just put those dollar amounts in. And that's what we're doing
Okay.
in 2 weeks, in the second meeting for TAD and TIF fund.
Who does our sales tax reports to the state? On the sales tax we collect on electric from our utility bills?
I believe,
Who submits it to the, we submit it to the state, do we not?
we do submit to the state.
I would like to know how much we pay.
Got it, all right.
Quick question, Ben.
Yeah.
On page 90, on the fund balance report,
Sure.
could you explain the difference between reserved and unreserved on the general fund in terms of those balances?
Huh? Yeah, you can look at mine. I brought it.
All right, let's
And by the way, we need to compliment our team in clawing our way back from a negative fund balance, so
Absolutely.
we're creeping ahead.
All right, on page 90 for the general fund, again, you've got reserved fund balance of $238,000, unreserved of $2,224,000. All right, what that is, if you were to turn back to page 14,
Okay.
included on your balance sheet at the end of the year are prepaid expenditures of $238,489.
Okay.
Governmental accounting requires in a governmental fund to report that as a reserved type fund balance, meaning that it's not cash, it's not spendable, if you will. Next year, when you all have to implement GASB 54, all of this language and whatnot is going to change anyway. But that's really all that is. That it means that included in your fund balance was expenditures that you've actually used for prepaid items that then have to be reported as reserved.
But the unreserved are items that accounts payable to the city of Griffin?
No.
Or is that what you're saying?
No, that's just your net, that's the net fund balance that is not necessarily going to be reserved for anything else.
Okay, gotcha. Now, in comparison of the fund balance for the general fund, right now we're at 2.2 million. What should our goal be for,
With the workshop.
where should our long-term goal be in terms of percentage of our general fund? Do we need to target for our general fund balance as well as our combined fund balance?
Okay.
Where should our target be for each of those?
That's something that there's really not necessarily a set rule of thumb, if you will. Each city has their own theories behind what they want to have in there for emergency situations, for tax relief potential going forward, what have you. One thing that I always like to look at is your total expenditures. You've got 23 million of annual expenditures. Something 10 to 15% of that number included in your fund balance is a reasonable starting point.
So our general fund's 25 million, so minimum $2.5 million.
Well, I think you go back to the Budget and Audit Act in Georgia, where technically you have no reserve. Now, it's acceptable practice to create a contingency like Wade's referring to. But if you read the law on its face, each year you expend out your money and then you carry over to the following fiscal year and as part of your revenue source.
But we used to have a fund balance close to $7-8 million.
And I think everybody does that as a matter of good, prudent business practice, that you try to have a reserve. But the law itself doesn't technically recognize the ability because you have a balanced budget in each fiscal period. So at the end of the period, if there's revenue left, you technically carry it over as revenue for the next year.
My question is, where should our target be at, and at what point do we say we've reached our, where we need to be?
There's no...
In terms of an accounting side, in terms
We're
of...
not talking legal, we're
I'm
talking...
talking about
Yeah, I mean,
what's prudent and where should our target be?
I don't get this.
Should we be shooting for the $7 million for the general fund, 25%, or should we be comfortable where we're at and then work on our budget from
You
that?
want to at least cover the low point in your cash flow cycle, so I don't know if we kind of determined what that low point is so that you're not borrowing money. I mean, we try to keep enough to make sure we don't end up having to borrow money when that low point hits. I know the maximum for school systems is 15%. You can't go over 15%. But you know, county and city, you don't have that kind of rule, and I know county's been up to 25% of that sort of thing, but you know, it's also a lot different size budget. But you know, it's really just a matter of policy. But I'd say wherever our low point in cash flow cycle is where we probably want to at least target for.
You're saying, I'm having trouble hearing you, but what you're saying is you look at your individual cash flows, and you have to have enough money around.
Yeah, so that you're never borrowing to meet payroll. You know, it's a lot different for school system because we're so dependent on the property tax coming in that we have that low point where city has the electric funds and things like that. It's pretty consistent all year round that they can transfer and cover payroll, so we probably don't have as much of an issue here as we would with school system. But I'd say that's at least a minimum there that you might want to try to get to.
Over the county too, because we didn't have utilities. You had to have enough fund balance to carry you through those lean spring and summer months before the property tax hit. So you had to carry a pretty hefty balance, or you had to sell tans.
But I mean,
That's right.
Many years ago, prior to Kenny coming in.
We finally broke that cycle.
So anyway,
It was a
you
terrible
think
cycle.
if our $20 million operating budget, not total, but operating budget, 15%, $3 million is a sort of a reasonable
That's a reasonable figure. Yes.
figure. All
And
right.
of course, one thing that you all already pointed out, this is as of June 30th. This is close to your leanest months. I mean, the majority of the general funds that come in are going to be in November and December when you receive your property tax.
And then in regards to the health, the OPEB benefits, is there anything in this report that shows what our liability is in regards to our,
Yes, sir.
where we're at, kind of the status? That's the retiree medical side.
We'll turn to page 59, note 16. is the OPEB information. On page 60, you can see that as of the end of the year, you all actually have a net OPEB asset of $212,000.
Wow.
And this year, Marcus, is the year that we'll do you're looking at doing a kind of a reevaluation of the whole process, or where we're at on that?
Yes, we have the results of that actuarial study, and that actuarial study may eat up some of this asset that we've placed in there in anticipation of a potential increase in the future OPEB costs. The assumption, well, we can discuss that at the next meeting or a little bit later, but there are some variables that changed in the actuarial report.
So this is a
Not
positive.
changing variables, what strange variables is that?
The interest rate.
That's a joke, let's get it.
So everything is satisfactory right now. We're okay in regards to the OPEB and our
Too early,
contribution.
Marcus.
Yes.
Did you come up with a figure for me? I know I saw you figuring there. Oh, okay.
So our OPEB is okay at this point in time?
Yes, sir, it is. Again, on page 61, as of the end of the year, now this is not a schedule of funding progress, see, but you over-contributed by 136% in 2009, 84% of this past year, but again, to have any form of OPEB asset as of the end of the year is a positive thing.
Right. I've heard others that did not.
I would say the
Well-
nightmares are all over out there, we're lucky.
The city has actually decided to fund its overall OPEB liability, which a good majority of those out there have not.
All righty, do you show our sales taxes in the audit that we pay, the city pays?
The total sales taxes?
Yeah.
I mean, it would not be
Why do
separately
you
stated
not?
in here.
Okay, but do you have it separate?
It would be on, yes ma'am, on my trial balance. I could certainly get that number
I
for you.
would like to know.
Okay.
There's an interesting, we're getting ready to renegotiate local option sales tax. And I would say that we pay a hefty sales tax to the state, which comes back and is divided between the city and the county in an equal amount. So, in essence, our city residents are supporting the county in which they live in, so they get all their services from the city.
But our sales tax only is our utility bills, not the general business.
That's all I asked for, was on
Okay.
the electric is all we charge it on. Is that not correct?
I believe that's correct.
But that's a hefty number.
It is.
Has to be a hefty number.
All right, well, one thing I wanted to mention too, again, about the findings this year, while there were, the very last page on 119 shows the findings that were there in 2009, both of those were cleared up. And while I may say we had 2 last year and 3 this year, things on surface may look worse. In reality, in my mind, the city, for 2010, the finance department made an actual huge stride forward in doing a better job of getting prepared for the audit and doing a better job of providing you all on a monthly basis the financial information on a more accurate basis. When in the prior years, when we were given the trial balance to audit, we had to make numerous journal entries and turn that trial balance upside down. This year, that was very, very much tremendously limited in the amount of journal entries we had to make. Therefore, the information that Marcus and his finance department are providing to you all is more accurate, which allows you all to make better decisions. So I
Thank you.
think they should be commended for that.
Are there any other questions? Shall we move on with our workshop and review our financials for November and December? Thank you, sir, for coming. You've
Thank
given
you.
us an excellent
Nice
report,
job.
and we
Thanks, ma'am.
appreciate it.
Yes, ma'am, we appreciate you all.
Next up, more financials. For the sake of brevity, perhaps the best thing would be to focus on the December reports. November has passed. I mean, the information is there for question, for Q&A if we have any. But I'd like to focus on the December reports if that's possible. We can start off with the cash report. And just item note, if you want to really mark it, the solid waste fund, that is a timing issue. Basically, we have deposits in transit, checks in transits. Our books are going to be a little bit more timely with issuing of checks, and the deposits are coming in. The bank, the balance is available, the bank balance is positive. And we have mechanisms in place to prevent overdraft conditions. The other one was the CHIPS grant. Again, that's a periodic issue. Towards the end of the month, we issued a check at the end of the month, and the transfer came in the following day.
A couple of things that sort of hit my eye going through them. I'm surprised that the hotel motel tax is running above budget. So I'm a little surprised.
Very conservative budget.
It's a conservative budget, not a good economy, huh?
Okay.
Well, it's gone up a little bit, or so the fellow from UGA said yesterday.
Okay.
Dorfman said yesterday that it has gone up. Sales tax is noting that, he said. It's noting the fact.
Probably a combination of very conservative
Yeah, he said a
projections
minute
and
amount, but it was going
probably
up.
tracking a little better than we anticipated.
Yeah.
And I noticed that solid waste revenues are down in budget, so you're struggling out there, Mr. Phil, trying to get rid of, sell some waste stream.
Phil, I'm trying to give you all of my 10 years of city paperwork in the recycling container. It should go up. I mean, it has occupied an entire walk-in closet.
I just want to shred a bunch of stuff. We at the question point, are you, we at the questions stage, or?
Oh, that's fine. If we're ready to look at the,
I didn't know you had stuff you want to throw at us.
local option sales tax and the SPOS numbers.
Yeah.
Okay.
Again, a very conservative budget, because we're doing good compared to budget, but you were very negative on your budget.
And this year may prove to be no different. This
Much better
upcoming
coming
budget.
over than under.
All right, as far as the local option sales tax, it looks, based on the initial numbers that we have here, but a lot has yet to unfold for the next 6 months. It looks like we're tracking on target with a slight variance there.
You're right.
If I were to estimate that out, it's probably a $45,000 positive note for the local option sales tax.
What is our percentage now?
40.
40?
I believe
60/40.
I believe that's correct. And as soon as we get the updated information on SPLOST, we will bring those as well. All right, moving into the revenue and expense by fund, the interim statements by fund. At this point, I'd like to open it up to questions, if we have any.
Well, I have a comment or two. I'll continue it.
Sure.
Airport's having a terrible year, but I'll give Mr. Moll credit. His expense control has been brutal. He's way down on expenses, so it could be a lot worse. So, give him credit for cutting expenses and cutting expenses. I also got to put my plug in the golf course. Golf course loss so far the year to date is $159,000. We're going to be at a $300,000 loss at that rate before the year's over for that golf course. That thing is a huge, huge drain.
I think it's because the economy, all golf courses are suffering.
Oh, no doubt.
But I noticed also that everything that had to do with downtown was also in the deficit area. I think that there are just certain things that you have to adjust as far as the operation of your city and the amount of people that you serve. We can note that perhaps they were very careful out at the golf course as well as expenses versus income as well.
On page,
I was approached by GMA this weekend that they'd like to bring the Mayor's Motorcade Golf Tournament to Griffin. It's been in Dublin the last several years, and they approached me about coming to Griffin this year. They wanted to kind of pass it around throughout the state. The different municipal golf courses, so told them we'd love to have it.
Right, I made a pitch for the golf course too. We've got several people that that are commissioners who travel around to play golf, and we have invited to have a competition between their city and our city at our city municipal course. So we will be pursuing that later, but it will be something that maybe we can generate a little bit of fun with.
On page 3, Marcus,
Yes, sir.
the operating column, the operating account has grown significantly. The Georgia Fund 1 grew by about $1.5 million. What is that particular fund?
You're looking
there?
on the cash report, sir?
Yes, sir, page 3. It's a 2.521 million.
I'd have to confirm what that comprises. I believe we have a sinking fund set up somewhere. I'll have to verify that number for you.
It kind of popped out when you have
Yep.
$1.5 million
That's
increase.
Good question.
The question's about Georgia Fund 1 and the general fund, is that what you're asking about?
Yes, sir.
Well, overall, evidently the budget was conservative. I noticed the departments are pretty close to on target, but the expense control's been excellent, so I think we're doing okay. That's right. Except for that bleeding at the golf course.
You know, it's always, you know, when we're getting with the golf course and whatnot, it's always kind of hard to tell with the cyclical nature of what we're looking at when we don't have the same point in the prior year, and even then you can have a difference in the number of days by the same, well, I guess, depending when weekends and all that sort of thing falls, but, you know, I know in golf course, I'm assuming, when's the high period for that? May, June, July? I mean, is it pretty much split?
Spring, April.
April through. So, man, a lot of these areas, you know, it's hard to tell by the point in December and truly say by half year at this point we're over or under when we have no real idea, unless we take the statements that we saved and go back and research of where we were at the same point in the prior year. But, you know, so given that, it's just hard to make those statements. But good job.
Also, keep in mind at the golf course, we did,
Can the volume be turned up some? It's
Can y'all
just
turn
not,
the volume
you're not here, I can hear you, but it's just
I'm
not like.
sorry. Also, keep in mind that maybe a little prematurely, we did budget for some alcohol sales at the golf course, which we have not been able to institute yet because, as you know, we ran into some reporting problems with the cash register, and we went in and bought a new cash register system, and we want to link it into our other system so we can more accurately reflect those cash sales and the money that comes through the golf course. So that was a little more cumbersome than we anticipated during budget time. So we may be even more behind on the golf course until we, even though I don't think alcohol sales is going to save it or bring it up to where it needs to be, still we have not been able to put that revenue into the picture yet. And hopefully we'll be able to have that done by spring and hot weather when maybe people will drink more at the golf course.
Okay, any other questions? All right.
Thank you.
Chief Strickland, are we tabling this,
Can-
or are we going?
Yeah, before Chief Strickland comes up, I think it would be prudent to really congratulate Marcus and his staff, not only on the audit, but the way that we've made improvements over the last few years, especially under Marcus's tenure. And he's got a great staff under him that do a great job, and I think that is very evident by the progress we've made over the last few years. And I just want to thank him and congratulate him on
Right, Marcus,
the work
we're
that he's doing.
You know,
we're very proud.
In these sessions, we pick at your financials, so you only get the picking part. But let me tell you, when I got on the board 5 years ago, where we've come from, these financials is nothing short of remarkable, so the improvement.
Well, thank you, and again, as Mr. Smith said, it's really the staff and the team and the directors. I'm just presenting the information to you guys, but they're the ones who are doing the work, and they're the ones who really deserve the accolades. So, thank you.
Well, if that's the case, why don't we do away with them?
Mark,
Save them.
He just talked himself out of it.
Yeah.
Marcus is very humble, as you know.
Are you a tough boss?
Staff.
Are you a
Fine
tough
job.
boss, or do you speak softly and carry a big stick?
I don't know, I'll let the staff discuss that one.
I'd like to
I'm
add,
results oriented, let's just leave it at that.
Right, and you just say, we expect this, and they do it.
Mark,
That's the way life should be.
I'd like to add that
Husbands should
I think
always...
you do a great job too. I mean, these reports are very thorough, and I know the easy thing to do is to, you know, whenever you get the findings and whatnot or the deficiencies, say it's easy to sometimes miss the overall picture of a massive operation going on and the number of transactions that have to go on through that operation, and focus on those one or two lines that I considered every one of those very minor. And, you know, in the grand scheme of things, I think you're doing a great job, and I appreciate it.
Marcus takes those audit comments very personal.
I would too.
I would too, yeah.
And, you know, when you get any kind of, because it's like a criticism, and whenever you get the things you're thinking, gosh, you know, we're running this huge operation, and I really, you know, I want people to take away from that. Don't focus on such small, simple issues when overall they're doing a great job.
Yeah.
You will get me the sales tax that we have paid?
Yes, I've already communicated with our
Okay.
staff to get that for you.
Thank you.
And again, I appreciate all the vote of confidence from you and the support that I've received from Mr. Smith and the directors and everybody here. Thank you.
Thank you. Our chairman has asked me to continue, so Chief Strickland, if you will come up and touch on this touchy issue. At least my 2 cents in this morning's paper, they were all humorous. There wasn't anything mean-spirited in it.
Well, they are...
Well, they talked about spying on them, but, you know.
I understand.
Those aren't cameras.
And let me explain what they're saying is a spy camera is nothing more than they have put in video to change the light. There's no loop in the ground. So when your car comes to that camera, that's what tells the box to turn the light. That's all it's doing.
It's a motion sensor, basically.
It's a motion sensor, but it's camera instead of in the ground.
Perhaps Mr. Smith will call in to my 2 cents and explain that.
We've already put a notice out to the newspaper that for people that read the paper, and obviously if they put in my 2 cents, they read the paper. We're gonna try to clarify that.
But that's belongs to the Georgia DOT. It's
Right.
nothing that we've installed, but it came with the LED lights. And that takes us to our next problem. We have asked you for a public hearing, and we had 2 locations to recommend to put in red light cameras to reduce accidents. But we were unaware when we scheduled the public hearing and did everything we were supposed to do resolution-wise and everything else to get your approval that the DOT had changed their policy on taking over the functioning or the mechanization of the boxes. We only thought we were going to have to take 2 locations, and they advised us if we did the 2 locations we were requesting, we would have to take every light on Taylor Street.
Wow.
Which would be a huge cost and probably kill what we were trying to do as far as reducing traffic. Brent says I'd have to hire a person and put somebody full-time on taking care of red lights if we went through with this request. So I guess what I'm going to ask you to do, we're still going to try to work with Census in February and see if we can find another location or so to take it off of the Georgia DOT network. And I guess what I'm asking for at this point, are you interested in even pursuing this any further?
Where is the next biggest traffic log?
Dwayne, do you know off the top of your head where our next...
The top 3 inside are all on State Route 16, Hayden Street.
What about Poplar and 8? That always used to be a terrible
I
area.
can check the figures, it would be down considerably as far as numbers, because the top accident rates are all up and down Taylor Street, but I'll be happy to check it.
than College.
Yeah, we might be able to do
And,
something to
and
in college.
Maple and Crescent's a T-bone about seems like every other week or so.
Well, you've got to actually look at the number of accidents you have there per vehicle traffic is going through there and see what kind of percentage you've got and, you know, how many of those accidents result in significant property damage or injury, and then you've got to weigh that against the possible number of citations that could offset your cost. This particular company, and I guess it's the way the law is written now, it's not cost neutral anymore. In other words, you've got to pay the contract price to run that light regardless of how many citations that camera may generate. So, you know, I would think it would be doubtful that an off-system light would generate the number of citations to pay for the cost of the contract. I would be surprised if it did. And I would certainly hesitate to get tied up in a contract that's going to require a significant monthly expense if we couldn't justify that expense would be cost neutral, and I don't know that we'll be able to do that.
Yeah.
We certainly can't do that if we have to take over the maintenance of the traffic lights, whether it be 2 lights or all the lights on the state route. We just don't have the expertise to do that. Even though those cabinets are pretty large and we would expect them to be small due to technology, there's a whole lot of stuff in those cabinets, and we just don't have the expertise to take over responsibility for those.
Let me add one thing to that. We used to maintain the lights on the state system under a contract with DOT. Every time we had an accident, traffic accident on the state system, along with suing the driver who was generally at fault, they would also sue the city, contending we were negligent in the timing of the lights. The lights didn't function properly. So we significantly reduced our legal exposure when we got rid of that contract years ago.
Right.
Well, let me just make this general statement. I have no philosophical problem with red light cameras. So I think it boils down to a business decision on other places, whether it's smart business or not, reduce accidents. So if y'all come up with a location that makes good business sense and reduces accidents, I'm okay with it, but it sounds like chances of that are slim.
Well, I guess what we're asking, Mr. Moore, is if we could just table what we have on the agenda and allow us time to look. If there is one, we'll come back to you. If there's not, then it'll die silent death.
Right.
Well,
That sounds
we really
reasonable.
won't have to table. We do have a public hearing scheduled because we did advertise for a public hearing.
Yeah.
So we will, I would suggest we go ahead with the public hearing tonight since it was advertised, see if there are any comments. We do not have a vote on the agenda tonight. We pulled that from the agenda until we can get some further information, but we would like to go ahead with the public hearing to see if anybody has a comment.
All right. Makes a lot of sense. Thank you.
Okay, thank you. Mr. Bosch, discuss sale of excess power to Albany.
Either I'm going deaf or we're short of electrons to amplify today.
I'll just speak loud. That is,
I can hear you.
I'm not as loud as I normally
Yeah,
am.
we can hear you.
Good morning, everybody.
Good morning.
How's this?
Much better.
All right. I wanted to talk real quickly, I wanted to mention a meeting that we had yesterday on a totally different subject on Phil's revenues. We had a meeting of the way Cogsdale reports Phil's revenues, and the way they come up is in different buckets than what we normally see. So I called Marcus yesterday, and we will be meeting with finance. There's a lot of areas that are being lumped together, so we want to clean that up, and I think that will help out on the financials next month, the way we are reporting solid waste revenue. So I just wanted to bring that up to while there might look like there's a deficiency, it might be the way that we're reporting it to finance, and then finance puts it into the report. So I just want to let you guys know that we are trying to clean that up to the way we report that revenue to Marcus. So I just wanted to add that in there. All right, we have a possible sale energy to the city of Albany. And I want to give you a quick history on our capacity real quick. And I know we've talked about this chart that I've got in front of you many times. One thing that I did different is on the side, I wrote the levels of megawatts that we have per item. And if you look at the green line, that is our intermediate load, or pretty much our normal load, and our base load is below that. So where we have about 60 megawatts of base load, everything above that is our added capacity, and that white area.
This one here, that's the green line?
Yes, that's the green line.
Okay.
And everything above that, our normal capacity is about 60 megs. Now, during the summer, we'll peak out at about 100, 95, 100 megs that we're using. Now, everything above that is also added capacity or reserve capacity that we require. And we have a limit of about, or we set a limit of about 16 megs that we want to use for our reserve capacity.
Wait a minute, you said, I'm sorry.
No, go ahead.
This green line is our capacity.
That green line,
You're talking about our demand.
that's our demand. That's our normal average usage on a normal day, normal temperature. So we're using somewhere, 50, 60, 70 megs on any given day. Now, on a summer day or a winter day, then we're going into this added capacity that we have, which that white area is our combined cycle. One thing about combined cycle, which has happened this year, and I don't really want it to skew the conversation, is that we've dispatched combined cycle before we have coal this year. That is very abnormal. It just doesn't happen that often. Now, did it benefit us? Yeah, it benefited us because we had the combined cycle. There is a level that we need to in our fuel management. What is that acceptable level? We have, as you can see there, we have 50 megs of combined cycle. Now, most of the time, that's sitting there in reserve, but you're still paying for it. So just keep that in mind. So as we go forward, and as I've said in the past, this is going to be something that we have many conversations on as far as managing our fuel portfolio. So what we have is we have a chance to sell 10 megawatts to the city of Albany, and we've done two things. We've done a market analysis because we wanted to know what that energy was worth going forward, which is a very difficult calculation because of the economy and what is that gas going to be worth. You've all heard the conversations that gas prices are low right now, and that's fantastic. But I guarantee you in the future, with future legislation and everything that's going to be coming down on coal, gas is not going to stay low. So we have a volatile fuel that we need to manage. So what I'm recommending is a sale of 10 megs to the city of Albany, which you also got to remember we have 17 more megs of Vogel 3 and 4 coming on in 2016, 2017 with a very heavy debt load. So we'll have to, we just got to manage our fuel over the next 3 or 4 years to prepare us for that. So I'm recommending that sale of 10 megs to the city of Albany. What that will do will probably net us around $1.5 million.
Wow.
And yeah, there's a wow factor to that, but you got to remember, next year is going to be a tough year. We're going to have basically zero sales. Our year-end refund is going to be very low, and even though we have compensated for that in our rate discussions, this is something I'm going to recommend in the terms of the sale, that the most of this revenue is realized in the 2011-2012 budget or moving forward, depending on what they agree to. So that will help us offset this lack of sales and lack of refund. So,
Mr. Barnes?
yes, sir.
You probably already answered this, and excuse me if I missed it. What caused Albany to need power?
Albany has zero combined cycle. So where we have, if you look at our chart, we have we got great diversity in our fuel. Now, in my opinion, we have too much combined cycle. It is my opinion that they do not have diversity in their fuel portfolio. So they're wanting to pick up some combined cycle just to give them a little bit more diversity in their fuel portfolio.
Well, what would happen if we sold Albany Power and we find ourselves in that position?
That we find ourselves in what position, sir?
Well, we need some extra,
Right now, we have about 35 extra megawatts. And even in one of the hottest summers we've had, we only peaked out at about 100. So we have a total capacity of right now of about 130 to 135 megawatts. So we are still what I consider a very long city. We have too much capacity, and that's why I'm wanting to lay off a little bit of it now. And then I will probably bring you, in the next year to 2 years, I'll bring you additional sales to get us in a position to have 16 to 17 more megs of Vogtle 3 and 4 coming on. And one of the things that was interesting on Sunday night, and I don't know if anybody picked up on it, but Vogtle 3 and 4 is due to be licensed in 10 months, ahead of schedule. Now, at that time, they're on a go-fast 48-month build period. And my rough math means that Vogtle will be going online somewhere around 2014 instead of 2016, so does that possibly will move our debt service up 2 years. So we have to be prepared to be able to take on that additional 16 to 17 megawatts. So we are not going to be short of power.
We probably, through the years, bought too much combined cycle. You know, sometimes our eyes are bigger than our appetites or whatever.
That was my next question. Why do we end up with so much?
Well, it's through the years that perhaps it's been offered to us. MEAG has come down and offered this, that we could buy this much more, and for some reason or not, the boards did. You'd have to research it to know why we did it.
Well, combined cycle was purchased, I think, just before I got here. I don't recall. I think John Jones made this, or proposed this to you about 8 or 9 years ago as he was going out. And at the time, combined cycle is fairly expensive, but at the time, with growth projections and everything for this region, you know, it was probably borderline a good idea. But, you know, with our growth not meeting those projections and it being expensive and us having so much of it, and now looking at growth projections, we feel like that it would be in the best interest to dump some of it.
But we still paying for it, whether we dump it or
You're
not.
still paying for it regardless.
We're paying for it.
Does Electric Cities look, is it still Electric Cities, or is it a different organization? Have they looked at our proposal and agree that that's the best thing?
Absolutely.
Okay.
I'm working directly with Jim Fuller, who is the CEO of MEAG.
Okay.
The CFO, sorry, and then also Bill Said, and we're looking at all the models, and we want to make the best deal for the city of Griffin, so we did a market analysis, and we also did, we're looking back to see every dollar that the city of Griffin has put into this 10 megawatts of combined. That figure is actually ending up to be the better figure, so we will probably move forward. And all I'm doing is, I just want an agreement in concept. I don't think we need a vote or anything, just so I can move forward in the sale. On the benefit of the sale side, you also got to remember the benefit on the expense side, because this would save us also about $300,000 a year in expense. We have 12 more years of the contract, and $3.6 million savings over the next 12 years. So not only do you have the sale, you have the savings.
And you would designate the money to go to the future expense in the 2011-2012 budget.
Yes,
cost of combined cycle.
And that's going to be a moving figure, and I will constantly be up here to review that, because it's a fine line between our revenue and rates, because we always want to make sure, the rates that we just set cover our expenses. It's based off our expenses, so it's always a fine line, but I always want to keep us slightly over that line.
All right. I probably forgot what you said at the beginning. This is a 1-year deal or a 10-year deal?
It's permanent.
Permanent.
It's a permanent deal.
Permanent, that's what I'm...
Yeah, we're actually selling a portion of what we own. So instead of owning 50, we'll own 40.
Makes sense to me. I'm with you.
And then in year 2032, we have another,
2016
we've got the initial batch, but then there are another batch that we get after.
of combined
15,
cycle? Or
On the.
Vogel, we.
Vogel 3 and 4
we
comes on
bought as much Vogel
2016.
as they would allow us. I remember we over purchased in Vogel as well, or it may not be, I hope. But
Well, we
I
have
remember
to,
that they,
How much did we buy from Vogel for our use?
of 3 and 4 or 1 or 2?
Of the new one, of the,
Actually, 16 comes on and it's about 16 to 17 megs
but
total.
when there's a phase-in, you bought a
It
certain amount?
phases in, but the lump sum comes on in 2016.
Okay.
And then a couple extra megs come on.
Listen, if they start shutting down coal plants, as Mr. Johnson said, that Vogel nuke power will be extremely profitable.
It will, but remember, we have a heavy debt.
Understand?
But my, excuse me, sir?
Yes, I agree with you. It's a good deal for the city, especially when you're talking about saving something like $300,000 a year. That end up being a plus for the city, so.
Yeah, this is well above what you agreed to give us permission to do. Mr. Smith and I, we do the small sales, which we have one on this agenda also, but we just wanted to update you on what we're doing on this.
We're very fortunate as well to have a diverse mixture of where we get our power from. There were some smart decisions made in the past. So I think we're fortunate, and then when Vogel 2 comes on, hopefully that will be the less expensive of the options, even though we've got some debt service as far as the cost of the actual power itself, hopefully will be the less expensive. So we think it's a good move. We'll have a contract coming forward. Since the consensus is for us to go ahead with what we've done, we'll bring you a contract within the next couple of meetings after we get it all finalized.
that's good. Thank you, Bill. Kenny, we're going to review the agenda, is this correct?
Yeah, Drew wants to chat with you for just a minute before we get into the regular agenda.
Just very briefly, I wanted to update you and alert you to something that took place on January the 10th. Now, that was also the starting day of the Georgia General Assembly, but equally important, that was the effective date of the 2010 amendments to the state ethics law. You may recall last year there was quite a bit of concern in the General Assembly about ethics and the desire to toughen state ethics laws. One of the things they did was change the name of the State Ethics Commission. It's now the Georgia Government Transparency and Campaign Finance Commission. Quite a mouthful. More importantly, though, to local governments is they have now extended the requirement for registration of lobbyists to efforts to influence or advocate legislative change before cities, counties, and school boards, which means that effective as of January the 10th, if somebody comes down here who is not speaking for their own personal position, whether they have a property interest or financial interest or a strong personal interest that they're trying to express, they would be exempt. But if they come down here in some form of representational capacity to ask you either to pass an ordinance or not to pass an ordinance, and it could also be a resolution that you're looking at, but if they ask you to take any type of legislative position and urge that, they are deemed by Georgia law now to be a lobbyist. That means they have to first register with the commission as a $300 annual registration fee. They get a little tag, which Brant Keller probably has a pocket full of them, but it says, it's got the picture on there, and it says in big letters, lobbyist. And the law requires them to wear their lobbyist tag in a visible, conspicuous, visible manner while they're engaged in lobbying activity. Equally important, they changed the definition of the term lobbying. Lobbying today includes any person hired specifically to sell goods, products, and services to the state or the local governments. Now, the exception to this is that if we go out and solicit bids, say sealed bids on a truck, for example, or a fire truck, piece of equipment, the person who fills out the bid response and turns it in is not deemed to be a lobbyist. However, if there's a sales representative of a company that sells fire trucks that calls on any of you individually, or calls on you as collectively as a commission, or comes down to see Kenny, or goes to see the fire chief, that person is supposed to be registered as a lobbyist, wear their lobbyist badge while they're doing so. Anybody who registers has a reporting requirement where they have to periodically report. If they come to visit you and invite you to go out to dinner with them, for example, they have to report who they took out, what they spent on lobbying that person, what the issue was, some basic information of that nature. So it's going to be a new ball game. I've talked to Susan Moore at GMA about this. I don't know if any of this came out at the Mayor's Day Conference this weekend, but Ted Baggett was working on it, and then he left GMA for a job at the Vincent Institute in early December, so she was not sure if they were going to be able to put anything on the program or not. But I think the downside is, what is your obligation? Well, first off, the law doesn't say you can't talk to a person simply because they're not registered, even though the law would require they be registered. The monetary sanction or penalty is on the individual who should register. In fact, he could face a sanction up to $10,000 for each occurrence of lobbying by a person who is not registered and should have been. There is no obligation as far as reporting somebody. If someone shows up here in a representational capacity to urge a position, we're not affirmatively under any duty to say to them, you should be registered. We're not going to listen to you unless you are. However, in talking with the commission, they have urged Susan to spread the word that, we ought to remind people, particularly until we get through a learning curve in this process. Now, there is a distinction in here in the exemption for lawyers. If an attorney appears on a client's behalf in an adversarial proceeding, that person is exempt. However, if they appear on behalf of a client in a legislative capacity, for example, if you have a rezoning application, the attorney for the rezoning applicant shows up, or the attorney for the group opposing the rezoning shows up, they have to be registered, wear the lobbyist badge in order to comply with the law.
All right, now you're talking about a citizen group, and we'll give an example, the Crescent Road deal. If they elect a person to represent them, that individual citizen who lives in that area would be considered a lobbyist?
I think it's going to be a close question with somebody who represents a homeowners association, where they would also perhaps own property within the association's subdivision or group, as to whether they're speaking personally or speaking in a representational capacity. I think it's more so going to people who are paid to appear, or somebody who takes on a cause that's not really their own cause.
Right, like I know the bank has a representative making their case known, but that person has no interest in the property.
Right.
So therefore, he's a lobbyist.
He's probably a lobbyist, yes.
Yeah, so if he shows up, he's got to have a badge.
And he's supposed to. He's supposed to be registered and have a badge.
An architect or an
Sounds good
engineer,
to me.
those folks now would have to be registered.
I don't think if
But they're here
if
representing.
they're advocating a change, if, for example, an engineer or an architect comes down on the rezoning and speaks, yes, they would have to be registered as a lobbyist. If a person appears simply on a fact basis, if they're only coming in here to give you factual background, I don't believe the law extends that far. There is an exemption for appearing before any type of legislative body at a legislative hearing, it says, for purposes of providing factual testimony. So I think you got to draw a distinction there. But here again, it's not your obligation, the way the law is currently drafted, to have to make that distinction. The burden lies with the person who's subject to the registration.
If we speak, say, at different conferences and things like that, representing the city of Griffin, whether it's at a MEAG meeting or going to the state House or Senate, would we be considered lobbyists if we're there?
No, and as an elected public official, you're exempt if you go down and talk to your legislator.
Okay.
Say at the Capitol, if you go up there. Now, Brant would not be, Kenny would not be, I would not be.
So you each have to pay $300 a year to
You'd have to pay your registration fee, get your badge, and
lobbyist now.
file your reports. Well, I think we all share that sentiment, but today it's the law.
Drew, I need to pass that on to the school system then? I mean, because, basically, since Colonel's not elected, they always go up to the Capitol.
Mhm.
They'd be considered lobbyists.
It's going to change the way some local government personnel does business, non-elected staffing does business. There's some folks who are there, and in some cities, like Atlanta, for example, hires paid lobbyists and has for years to lobby the General Assembly.
Do we, as a board, need to consider that as a budget item to pay, I don't know if we pay Brant's fee now, or do we
I
need to
don't know
look
what
at?
Brant and I talked about it, I don't know what the cost increase if he's been able to.
But if we're going to, I mean, if Kenny and,
And the freedom to go talk to your
I'm saying, do we need to look at that in terms of our people
If
in
you're
our
going to send
in-house that
somebody
we've
to
got
the
folks
legislature,
representing
yes,
us?
I think it would be a cost of the city of Griffin doing business if you're going to send somebody up there to advocate a position on state legislation.
We registered Brant and I did back when it was, what, $25 or something like that, and then you had to go up there and stand in line and get your picture made on like the first Monday between 12:30 and 12:45 and all this stupid stuff, so I dropped out.
But Chief is talking about metal theft and other issues of crime. I mean, anybody that's
Now,
representing
if
us.
they go to a legislative hearing to testify and not advocate, then they're not a lobbyist. But it's when you cross over that line, when you're trying to influence somebody's legislative opinion, that's when you become a lobbyist under this law.
We would never do. Yeah, we always present facts, we don't try to persuade anyone.
There you go. Just facts, man.
So anyway, I just wanted to give you a quick update on that, because he kind of flew under the radar a little bit.
In regards to ethics, I went to the ethics training this week, and they recommend that on an annual basis, the Board of Commissioners should review our ethics information, our policy, and just make sure everybody's on the same sheet of music in terms of my definition of ethics versus someone else's ethics may be different. And
We
for
are a
us-
city of ethics, so therefore
Right.
we need to do it.
But they
Yeah,
said
I
every year,
have a
they said
problem.
we should, so as an item of business at a workshop, recommend that we.
I agree, I think that'd be great.
There is a good chance there are going to be some more amendments to this law this year, particularly putting caps on how much you can receive as a elected official. So that may well be coming at you, just kind of keep.
Well, what do you mean?
Minimum yet, so I need to meet the minimum what I can receive.
Well, it's going to tie back in too, I think, with your campaign and disclosure finance, you know.
Yeah.
You're talking about donations for running, or, contributions to a campaign
It
fund?
could include that, yes.
Trips
All
to
right,
China.
I've never had an excessive one anyway.
You been to China yet?
Well,
Trip to China, take your whole family?
I know.
Honey baked hams,
Yeah, I think it's kind of interesting.
Is that
Victor
obvious?
Ralston took his whole family
Is
to
that
China.
like they have
yes
supported-
ma'am.
I wanted to, before we move on, it was my understanding that when we had our goals workshop that, the regularly scheduled agenda would not be a part of our workshop in the morning.
Okay.
Was I the
don't
only one that
remember.
understood that
don't
way?
I didn't understand that, but
That, because that was what my issue was with us discussing the regular agenda in the morning workshop. I didn't have a problem with the workshop. My issue was us discussing the regular agenda during the morning workshop.
okay.
That wasn't my understanding, but
What was your understanding?
that we just have one a month.
One workshop a month.
One workshop a month, but my issue with the workshop was not the workshop, and I didn't see it in the minutes, but I think the last thing that I remember saying was that I have no problem with the workshop. We could have a workshop every meeting. My issue was with us discussing the regular agenda during the workshop, that I thought that the regular agenda should be discussed in the evening before the public.
Yeah, I remember that,
Yeah,
yeah, I
I remember
remember
you
that,
saying
yeah.
Could you look back at the minutes of the meeting with that discussion? I recall there was a discussion at some point.
Yeah, the fact that we were.
I don't have a problem with us having a workshop, even if we have a workshop every meeting. My point was that I have an issue, and I always have had an issue with us discussing the regular agenda, which I feel like is the citizens' business during the workshop, rather than in the evening under the regular agenda.
Well, let me ask this then. If you have questions, which I don't particularly have any this time, on some of these issues, if we don't ask them in the morning to get more information for that evening, we won't have the information. So what do you think about, you say on item 20, I don't understand that, can we have this information tonight?
If you go through your regular agenda, you will know whether or not you have a question. Their department heads are here all during the week, they can answer your question.
Well, I think that the point made was that we receive our agendas on Friday before the meeting on Tuesday. And when Cynthia was talking about that, I think it was a matter that the citizens are not, we have no one here this morning that would be interested in anything that we do tonight. And perhaps that was what we were discussing when Cynthia brought this up. I personally believe that we should do people's business when the people are present. But we may not have anybody again tonight, I don't know. But
And that could possibly be, but like I said, we get our agendas ahead of time. And that was, my reasoning for bringing it up was not to do away with the workshops. That was just something that came out of it. My problem and issue was with us having to always do the citizens' business in the morning when there is no one here. And when we get here in the evening, we run through it. And I think that's this agenda, the regular agenda, should be something that's open to the public, whether they have a comment, whether they're here or not. I think they should have the opportunity to be involved in it. And that was the understanding that I left with from the workshop, that was what we would do.
Okay, and if I misunderstood that, I apologize. I didn't
That's all right.
realize that, but we can certainly do that.
right, I've looked through the agenda and I don't see anything that we have to do this morning that we can't do tonight.
If that's your prerogative, I can respect that, it's fine. It's fine.
Well, I thought that was the understanding we went away with from the workshop.
Right.
I enjoy the morning workshops to do the work and stuff, and I
Yeah.
Yeah, that was what we said.
enjoy the Tuesday morning opportunity to really
Do you want to go back to 2 workshops if we don't talk about the agenda, or you want to stay at 1? That's the question.
I have no problem with that. We said that we didn't think we would always have business, and if we did, we would schedule it. And I said in doing the workshop, I have no problem with the 2 workshops, with the department heads doing whatever they need to do. My issue was with us discussing the regular agenda during the morning workshop.
I guess we need to see whether 1 workshop will even do it, or whether we need to go back to 2.
Right, well, this month, 1 seems to have worked well. It has, so, and we can...
And that's the chairman's prerogative too, as well,
Right.
as working with Kenny to
Right,
get
and
the
Kenny can let us know if he thinks that we need, because we're
budget
dependent,
time.
right.
Budget time, we might need to have 2 workshops, or a third
Exactly.
workshop.
Okay, well,
Marcus is jumping over it.
oh, good, Marcus, thank you.
Question, if I
I'm
may.
going to put it on the municipal index cost paper here.
For the airport, we average about 500 per month, or about 6,000 per year.
Okay, wait a minute, let me write down airport, okay.
For the golf course, it's on average about 800 per month. I'm going to estimate about 10,000 per year.
What's the number you give? Is this sales tax?
This is sales
Sales
tax
tax.
that we collect and we remit. We
Golf
do not
course.
record this as revenue. It
Right,
gets
okay.
segregated as a
Because
liability.
it's got to be transmitted.
So, wait a minute,
Correct.
let me start over again.
Airport.
Airport, $5,000 a year,
500 per
6,000.
month, or 6,000 per year on average.
1,000.
Golf course, about 800 per month, or 10,000 per year.
Okay,
And then the electric is about 200,000 per month, roughly 2.4 million per year.
2.4 million a year.
Yes.
This is important information when you're talking about what we, as a city, generate to our local option sales tax. And so this is tremendous. We submit a tremendous amount of money to be divided 60-40 in this community that comes back. Thank you.
You're welcome.
Does the school do that? Have you segregated out the sales tax you pay?
We don't pay any sales tax.
Not on anything, purchases? You're exempt on everything?
Aren't they?
Boy, I tell you.
And stormwater, right?
And I will say the fair generated in excess of 30,000 in sales tax to be divided in the community this year in a 10-day period. Okay.
I did give everybody a copy of the January MCI that just hit the press, and of course the January figure is the one that we use every year for our MCI adjustment, so I did want you to have a copy of that.
So that would be 3.2%.
Yes, ma'am. So I wanted you to have a copy of that.
Inflation's cranking up.
Thank you. I think the mayor, they have written down the mayor on Three Rivers. I've attended all the transportation roundtable stuff. So it'll just make it easier.
make a motion to approve, or to, motion to adjourn.
Second. Okay, we are adjourned.